Hi guys, welcome back to video 8. Actually, I had to split video 6 up into 6 and 7 because it was too long. I can only do 10-minute videos at a time, but anyway, so I thought I'd make another video just to show you a couple more examples. In the previous video we looked at the moving average crossover method, and I kind of showed you how to find these stocks and how to identify buy and sell signals. So let's just look at a couple more examples. The fact remains with this method, you got to practice it a little. You got to develop an eye for what's working and what's not working. So let's head over to stockcharts.com again. Want to click on the free charts, and then we want to go to stock scans. I mean, this is just such a good tool. And then you can play around with different indicators, but as I said, the ones that I like is usually the ones that are in an uptrend already. So let's look at stocks that are in an uptrend. Okay, I've actually picked a few to save some time on this video, so let's go straight over into them. This is a stock, the ticker symbol is MMTC if you want to follow along. Now let's look at our steps again. Basically, step 1 is find a stock that's in an uptrend. Okay, so this is definitely a stock that's in an uptrend. Then we want to look at the 4 and 9 day moving averages. So let's look at the 4 and the 9 day moving averages. We'll update that. And there we go. Okay, so what you can see, like back in April, this stock started going into an uptrend, and it's been in an uptrend all along. It's slowed down significantly now, but according to our rule, this is a buy signal. The 4 day moving average just crossed the 9 day moving average, and this is a perfect example of when you would get into the trade. Now I want to point out something really important. Maybe I'll do it on the next video, on the next stock. Let's look at this one. I think this was a better example. This has got a symbol LBAI if you want to follow that. Let's just switch on our 4 and our 9 day moving averages. Okay, here we go. So I mean, it's easy to look at the stock and just say, well, if only I bought this on the 14th of March, like right at the point where it crossed just there, then I could have made all that money. And what if I sold it right at that point? Now it's fair to say that the problem is we can only see that sort of pattern looking back. The only place we can really look at is this. This is sort of our zone where we have to make buy decisions, because this is as much as we're going to see. We can't see what's going to happen in the future. We haven't got the benefit of hindsight like we do with these sort of lagging indicators. So what we've got to keep in mind is we never trade exactly on the crossover. We're always going to trade in that sort of that safe zone, which is just outside of the buy and sell signals. So that's an important thing to keep in mind. Now with this particular example, I would still buy this, because this is definitely it's a couple of days since it crossed over. It's definitely still in an uptrend, and I would say that that's probably going to go past the 975 mark easily. Okay, so let's look at another one. This is a stock, the ticker symbol is MALL if you want to follow that, and then we'll look at the 4 and 9 day moving averages, update that. Okay, this is a good example. So definitely this stock's in an uptrend, and what just happened a couple of days ago is that the 4 day moving average crossed over the 9 day moving average. So this is a perfect example of when you would get into this trade. So I would get into this now, because that's just crossed over and it's definitely in an uptrend, and I think that's probably going to go places. Now another thing that I wanted to point out is just stop losses. Now as a general rule of thumb, you would set your stop loss to the previous low in that cycle, if you want to call it that. So in this case, we could get into this trade on $7.25 more or less. I would set the stop loss back. You can go as low as 650, but I would say 625 is probably a very safe place to be with the stop loss. Alternatively, if you are using a trailing stop loss, a trailing stop loss can follow the stock percentage wise. So as a general rule, set it to 10-15% below the price you bought it at, as a sort of as a safety net. But yeah, so I mean, hopefully you're starting to see how simple this really is. I mean, we're basically looking at graphs. We're looking for two particular patterns. We're looking for a pattern where it crosses two different moving averages. If the 4-day crosses the 9-day average, we buy. If it's the opposite, we sell. So just looking at a sell signal, I mean that's a pretty good example of a sell signal. It's when the 9-day crosses the 4-day, and you can see as soon as it crosses, it keeps going on until it crosses back again. It keeps going up. So these moving averages are a pretty good indication of where the stocks are going, and as a short-term trading method, it's bang on accurate. It's really great, and I hope you're going to use it, and I hope you're going to practice with it. And keep an eye out on the website. I'm going to, apart from having all these videos up on the website, I am going to put some more examples and some more resources up. These 10-minute videos are quite short, and I'm struggling to get everything in 10 minutes, but I might just put some PDFs up and stuff like that. But check into the website, and yeah, thanks for watching the video.